Let's get a fundamental view then on the markets. Gaurang Shah, Assistant VP at Geojit BNP Paribas Financial Services, now joins in on the show. Hi Gaurang, it's been quite a task to conquer that 5900 level with conviction. What's your view on the next 3 to 4 months fundamentally, and what, if you have a positive outlook, what factors would you attribute that to?
Well, Avan, we believe that this consolidation phase will carry on for some time, and it's prudent to see over here that we are not just falling off the cliff. You are getting some small corrections and you get some buying coming in at lower levels, and it gives an opportunity, those corrections as and when we get, for all those investors who have got left out to go and participate. On the Sensex and Nifty, our belief is that we will be going towards 6100 and 6200. A lot of noise will start emerging on the horizon once you enter 2013 and the expectation on the budget, etc., etc. The reforms that the government has announced, and of course the developments that took place last evening, our belief is that this is a very positive and a strong signal coming in from the government, and it will definitely smoothen the nerves of a lot of large investors, both domestically and globally. In terms of sectors that will be in focus next year, I believe private sector banking on fallback of rate cut and inflation easing off, pharma, FMCG, metals, autos, cement, infrastructure. These are some of the sectors that we believe will do, or rather play a very significant role in going towards that 61 and 6200. And if everything goes well, then I don't think it's going to be very difficult for the markets to go and conquer new highs.
Right. Now, Gaurang, pretty much everyone we speak to is of the view that even going into 2013, you are going to see the financial services pack outperform, and that possibly, if you looked at sector performance, that financial services are going to come out on tops. But again, you know, while they say that on the one hand, on the other, there is this continuing concern about asset quality and, you know, this whole concern that things are much worse than they seem on the surface. So, somewhere, do you believe that the two don't go together, and this expectation that financial services outperforming into 2013 is a little stretched?
George, I think you will have to put your investment under the financial services stroke interest sensitive stroke banking under the microscope and then do it. Not anything and everything that you touch or invest in is definitely going to give you superlative returns. Yes, there are concerns in terms of asset quality. On the flip side, what we have noticed, George, is that the earnings that has gone by in terms of corporate earnings, there is a pattern of bottoming out, and we expect that the turnaround in corporate earnings will definitely improve the asset quality issue with some of the NBFCs, stroke financial companies or financial services companies or banking, as a matter of fact. And that will be a case of turnaround. But as a brokerage house, we have been positive on private sector bank, and we continue to hold our view. The banking and reforms bill, the insurance and pension bill, if everything falls in place, I think that is going to be a major game changer for this entire sector. And yes, in terms of banking licenses rolling out, well, there will be names or corporate names which will be in focus, like we've seen in the past. Names like L&T Finance and Holding, names like Bajaj Finserv, names like M&M Finance. I think these are some of the companies that will continue to hog the limelight.
Right. So Gaurang, you know, you're saying you continue to be more bullish on private sector banks than on public sector banks. But as we go into the next year and we see the interest rate cycle turning, you will agree that public sector banks are the bigger beneficiaries of that rate cycle turn, simply because they sit on significantly larger bond portfolios, and the return they get from that is going to be more than enough to set off problem loans that they face. Despite that, why is it that you continue to prefer private banks? Would you attribute it largely to governance?
Governance is one thing, asset quality and exposure to some of the sectors which are very sensitive, and asset quality has deteriorated as far as the exposure of PSU banks are concerned. And you know, the evidence lies, George, in the earnings that the banking sector has delivered, both in terms of private and public. Even the quarter gone by, if you actually go to see, some of the PSU banks have been a terrible underperformer. And the change in our stand will definitely lie in the numbers that the PSU banks come out as far as restructured stroke, asset quality or NPAs are concerned. And there's a case in point over here, George. Some of the mid-sized private sector banks have actually gone and made a new 52-week low, whereas the counterpart PSU banks have been struggling in terms of numbers and maintaining the momentum on the higher side. So it's not that we are totally underweight on the entire PSU banks. We have names like State Bank of India, Bank of Baroda, in which we continue to hold our positive stance. But yes, like I mentioned earlier, would prefer names like Axis, ICICI, Yes Bank, IndusInd Bank, Federal Bank, DCB. I think these are some of the names which will continue to dominate and continue the move on the higher side.
So, Gaurang, let's nail it down to individual stocks then. 3 or 4 large cap ideas that you like and 3 or 4 mid cap ones.
Avan, large cap in the auto, M&M and Tata Motors. Tata Motors has been an outperformer yesterday. Today it continues the momentum on the higher side. We have a target of 335 over here. On M&M, the 1065 to 1130 is where we see the price reaching. On the private sector banks, I have just listed on 4 or 5 of them. Axis, ICICI, Yes Bank, IndusInd Bank, Federal, DCB. Cement is the next beneficiary. If the reforms in the real estate stroke infrastructure takes place, then I think as consumption goes up, cement companies which have been performing well, names like Ultratech, I think Ultratech today was in the green. Shree Cement, I think it has made a new 52-week high if I'm not mistaken. ACC, we continue to like this name. We are a little bit optimistic on the metals pack, names like Tata Steel, Sterlite and Hindalco, and of course domestically and globally if the economies have to revive, then I think consumption will definitely start looking up. And in pharma, again, like private sector mid-cap banks have actually outperformed. We see outperformance coming in from names like Glenmark, Cipla, Sun Pharma, Lupin. We continue to like this name. Biocon, I think, could be one more name wherein we can add in on our radar, and definitely there will be momentum on the higher side.
All right, Gaurang Shah, thanks very much for joining us on the show with your view on the outlook for the markets and also talking to us about specific sectors.